Today, Tether responding to claims of insufficient reserves. FBI warns DeFi hacks and security concerns. And Singapore considers new retail crypto trader protections. Welcome to Magnum.Xtrading, I'm Bryan. The job market remained hot. Investor tensions remain high. The largest cryptocurrency by market value was recently changing hands over $20,000, down about 1% over the past 24 hours. Bitcoin has been struggling to hold its psychologically important threshold as investors fret over continued U.S. central bank monetary hawkishness tied at least partly to a historically low unemployment rate. Ethereum was recently trading near 1,600, a roughly 3% gain over the past 24 hours after the second largest crypto in the market value also rallied late. ETH has been struggling to hold support above 1,500 for the past few days. Most other cryptos in the CoinDesk Top 20 spent much of the day in the red. Popular meme coin, Dogecoin, and Polkadot were recently up more than 2% and 1% respectively. Trading volume was tepid compared to a week ago. Equity markets dipped for a third straight day amid the looming prospects of a third consecutive 75 basis points interest rate hike. The tech-heavy Nasdaq, S&P 500, and Dow Jones in the industrial average all fell about 1%. The U.S. Labor Department's latest employment report showing 11.2 million job openings in July offered the latest evidence of a relentlessly upbeat job market at odds with other economic indicators showing the economy is in contraction. Here are the headlines. First, stablecoin issuer Tether responds to accusations of having insufficient USDT reserves while branding the report as a series of unsubstantiated conclusions. Tether says that among the assets backing USDT are US Treasury bills or T-bills, which are considered a premier safe asset worldwide. While accusing the Wall Street Journal of biased coverage, the USDT issuer says that it applies the same margin of reserves as other prominent stablecoins. Tether says that even though it has not conducted an audit, it has maintained honesty and transparency in its disclosure. Next, FBI issues recommendations of DeFi investors amid security concerns and criminals exploiting smart contracts. The FBI made 4 key recommendations for investors in DeFi protocols. First, it encouraged people to be aware of the broad risks of DeFi and to do their research. Then it recommends that people use platforms that have undergone 1 or 2 multiple third-party code audits. The FBI also recommended people to be alert to DeFi investment pools that extremely limited time frames to join and rapid development of smart contracts, especially without the recommended code edit. It also highlighted the possible risk of over-crowdsourced solution to vulnerability identification and patching in open source code repositories. And finally, Singapore continued crypto hostility. A recent address by Ravi Menon, the authority's managing director, solidified this stance. Yes to digital assets innovation, no to cryptocurrency speculation. Digital asset innovation in the eyes of regulators means things like security token offerings and tokenized bonds. During his address, which attempted to clarify the sovereign island nation's stance on digital assets, Menon listed a number of key projects where the bank has engaged institutional stakeholders to build out offerings. Regulated digital asset offerings by their nature need to be geographically locked up and restricted to institutional investors. While the back end of these projects improve, they still access the same capital pools, maybe even smaller, that traditional financial products use. And that's all for today. See you.